Hey traders, TG Watkins here. I wanted to take a moment with this video and actually show you guys one of the best free indicators that I've ever come across. And it happened when I came into Simpler Trading, when I joined them as the company. And I saw that John Carter was using something that he called the third ATR, but basically it's the Keltner Channel. And what you'll see on my charts is it's these dotted lines here. And you can format these any way you want, and I have them dotted and kind of colored a little bit because I just want to know where they are. I don't want them to overpower anything on my charts. But they are based off the 21 simple moving average, the Keltner Channel, and they are the third factor. And we just call them the third ATRs. And I'll tell you, they've really improved my trading when I got to Simpler, and they just helped me understand that when price is likely to be overbought or oversold. Of course, price can stay outside of these boundaries for a little while, but it's just good to know. And I just want to show you, even on the UVIX, which is a pretty crazy instrument, you can see here that we clearly had price well outside of that third ATR, and so sure enough, it came back in. Even before that, if you kind of look here, there was another moment right here where price got outside of the third ATR, and what did it do? Came back in. And then you can see even numerous times it'll touch it, and that's another kind of target situation. Heck, even over here on the 15-minute time frame, you can see even on the way down where it gets a little bit outside of the third ATR, and then what's it do for the rest of the day? Comes back inside. And then same thing here. Gets too far outside of the third ATR, comes back inside. And this is just something that we see all over the place. And if I wanted to open up, say, Tesla, we can look at the daily or the hourly chart, and you can kind of see just when you know that price is a little too extreme in one way or another. Clearly, you can see here, this was a big move. Yes, it can stay outside for a while, but what you need to understand is you don't want to be chasing it up and through here. That is, you can see price is really far outside of the third ATR, these dotted lines that I have here. And it just helps us understand, hey, this is an extreme area. Yeah, I can go for a while, but be careful about chasing that way. Or on the downside, let's say you're short. Yeah, when you start getting outside that third ATR, might be a good time to kind of cash in on some of those shorts. Or if you're looking at this, maybe that is a good way to look at maybe buying a low or buying a dip. You just have to make sure that you're in the right trend and right direction, because if you do kind of look over here, you can see, well, you got to make sure, yes, it's outside of third ATR. Yes, it came inside, but you have to remember you are in an overall downtrend in this example. But you can see here, way outside of third ATR, and it came. Third ATR, and it came. Third ATR, and it came, okay? So another good way, I kind of look at this as like a freeway, and letting you know when you're kind of outside of the lanes, and you're gonna have to come back in. You can just see just how well, right there, third ATR came back in, third ATR came back in, third ATR came back in. It's kind of like bumper cars in between these lanes. So yeah, they can kind of stretch a little bit, and I know a lot of people probably ask about Bollinger Bands and say, hey, how does this compare to Bollinger Bands? I like these a lot better because they're less elastic. They're a little bit more linear in that case. Bollinger Bands are very whippy in my experience and what I see with them. And I just don't find them to be as reliable for me. I think if you were to look at this and use these Keltner Channel settings, I think you'll actually see the same thing that I do and just how impressive they are. And you can just see, look, it went from the lower third ATR to the upper third ATR. And it just depends on the time frame. As I said, you can have some really big moves, of course, news events and stuff like that. But usually when price settles down, it really gives you some good ranges. And even here, you can see again on Tesla, you can just see third ATR came back in, third ATR came back in, third ATR came back in. And so whether you're going long or short, kind of tells you either take the opposite trade or maybe cash them in from that direction. Just something to say, hey, probably not going to stay out there in that space for too long. So anyway, I hope this helps you. You can use these on daily time frames, intraday time frames. You can use them down here on the 2-minute, the 5-minute, the 15, just whatever kind of works for you. You can just see there's the third ATR there, there's the third ATR there. Gosh, even here, you just go all over the place. It's really quite fascinating. And as I said, it's one of the best things that I've ever added to my charts, and helps me understand when I should not be chasing something, or if I should be cashing in a little bit, or just expect, hey, it's going to look extreme, expect a pullback. It's not going to be up there forever, and it could start coming in the opposite direction. So hope you guys find this helpful and useful, and we'll see you in the trading room. Thanks again. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.